The markets have definitely been on the move, and today, we're going to break down exactly what's behind all these shockwaves. No noise, no fluff, just the core drivers that are sending ripples through the entire global economy.
It's a pretty direct question, isn't it? But, the answer right now is anything but simple. This isn't just one single headline that's creating all the turbulence in your portfolio. In fact, what we're seeing is the entire market landscape being reshaped by three really powerful, distinct forces, all hitting at the exact same time. So let's unpack each one and see just how they all connect.
Okay, let's dive right in with our first force. And this one is all about the big global central banks, and a pretty major shift in their thinking. You see, the days of that ultra-cheap money, the stuff that's been fueling the markets for years, they might actually be over. Now, what's so interesting here is this growing split in strategy. I mean, look at this. On one side, you've got the US Federal Reserve, and they're tapping the brakes. They delivered a rate cut, sure, but they're also sending some pretty strong signals that their whole easing cycle is probably done for now. Then, on the other side, you've got the European Central Bank holding firm, because that sticky inflation just won't seem to go away. And it's this divergence that's creating a huge amount of uncertainty. So here's the crucial point. What we're seeing, this isn't just a temporary wobble. It's more like a fundamental rewiring of the market's expectations. This regime transition basically means we're shifting from a world that was propped up by central bank support to one where companies, their fundamentals and actual earnings have to do all the heavy lifting. The market is literally being forced to reposition for a brand new reality.
Okay, so let's move on to our second force and see how it just builds on top of all that uncertainty. Because right now, geopolitics is no longer just some background noise. Nope, it's sitting right in the driver's seat. And it's directly influencing everything from supply chains to commodity prices and just overall market mood.
And this table just brilliantly illustrates the market's current mood, which is basically show me, don't tell me. We've got all these headlines about a new US-China deal, right? It covers everything from trade to critical supply chains. But then look at that market reality column. For every single promise, the market is deeply, deeply skeptical. It's waiting for actual proof, real shipping volumes, verifiable export controls, and follow-through.
So what does this mean? It means you've got to look past the big announcements and watch for the follow-through. The real story is in the headline. It's buried in the actual trade data and the export details. That's what's going to cause those lightning-fast moves in specific sectors like the chip and supply chain stocks. And all of this is happening while currency markets, especially with the yen's ongoing weakness, are just incredibly fragile.
All right. Now for our third force, and honestly, this one is a massive, long-term structural theme. The whole artificial intelligence industry is shifting gears. It's moving way beyond just selling products. Right now, it's in the process of building the entire ecosystem for our future. And if you want to get a sense of the sheer scale of this build-out, this number says it all. Multi-trillion. Let that sink in for a second. That's the absolutely mind-boggling milestone a company like NVIDIA just crossed. And this isn't just about selling more chips. No way. This is a valuation that's being fueled by huge capital investment in new production and massive infrastructure deals. We're talking 6G, supercomputing, the works. This really clarifies that evolution, doesn't it? The first phase of the AI boom, it was kind of like selling picks and shovels during a gold rush, right? Well, now we're in phase two. We're building the mines themselves. And that is a far more capital-intensive cycle, where companies are pouring billions into creating the very foundation for machine learning. But, and this is a huge but, with this high-reward cycle comes a very high-stakes risk. A massive portion of the world's most advanced AI chips still rely on one company in one location, Taiwan's TSMC. And this is exactly where Force 3, the AI build-out, collides head-on with Force 2, Geopolitics. It's a single point of failure that holds immense power over the entire industry. So let's recap. We have shifting central banks, tense geopolitics, and a massive AI build-out all colliding at once. So let's try to put it all together and connect these huge global forces directly to you and your investment strategy, especially as a UK-based investor. So what are the crucial takeaways for your own strategy? Well, first, you got to balance that AI excitement with discipline. These build-out cycles can be incredibly volatile. Second, think deeper about the entire supply chain. I mean, who's building the factories? Who's providing the logistics for this AI revolution? Third, never ever forget that as a UK investor, global currency and rate moves can either dramatically boost your returns or really take a bite out of them. And finally, with all this uncertainty floating around, you can't ignore real assets. Gold's recent surge past $4,000 an ounce, that's a pretty clear signal that a lot of investors are looking for stability.
And that really brings us to the final critical question you should be asking yourself right now. As these three powerful forces collide and reshape the entire market, is your strategy built to withstand the turbulence, or is it positioned to capture the incredible growth opportunities that are emerging? Definitely something to think about.